Why crypto traders fail, or why most crypto traders fail, and how you can avoid that. That's the $20 million question. Unfortunately, guys, that's not a question that I can answer because it's based on your self-development and nobody else. But there's a few things that people do differently. There's a few things that people don't do properly to give them that chance to be within that 10% of trading. How do you get in that 10%? Because this is a harsh reality, guys. Why do I say 10%? Because 90% of new crypto traders lose 90% of their capital in the first 90 days. That is a true fact. So how can you do things differently to get in that first 10%? That's what we're going to talk about. Okay, so this video is just going to be about how you can give yourself a higher probability. If you're looking into crypto trading, and if you're new to crypto trading, you think that you can follow any of these influencers, you think that you can make lots and lots of money by just copy trading, I want you to ask yourself this one question. How do you give yourself consistency if you're copying different people's trades, different people's strategies? What happens if they go away? What happens if they stop trading? How do you rely on yourself and nobody else, guys? So I say rely on yourself, guys. Being a part of a community is going to be a strong thing, but we'll talk about that very shortly. The first and most important thing that you need to have success within the crypto space, as far as trading is concerned, is a strategy. Now, what is a crypto strategy? We're going to talk about the bullseye strategy very shortly as an example of a strategy, but you need step-by-step rules. If you've got step-by-step rules, what does that allow for, guys? It allows you to go back in time and then test your strategy and then give yourself a higher probability of understanding exactly how much that strategy can make before you even open the doors, guys. So imagine it as a shop. You're opening a shop, you're in a certain area, you're in a certain location, you can do little bits of research, but ultimately, you don't know what your customer base is going to be until the shop doors are open. Now, if you're clever with trading, guys, and you go do your back test based on your strategy, then what you can do is understand exactly how much money you're going to make before you open the doors. Guess what, guys? If your strategy doesn't work, you don't open the doors, you try something else, and then you go and repeat it until you find something that works for you. What works for me, it'll be different to what works for you. I look at certain time frames, you look at different time frames. We've all got different outlooks and different horizons. So there's no magic strategy, is what I'm saying, guys. Don't ever let anyone tell you there's a magic strategy. Someone tells you to buy one for $2,000, $3,000, $4,000 on YouTube. Do not spend that money, guys. You could put a few hours into self-development. You can go and back test your own strategy. Then guess what, guys? You saved yourself 3-4 grand. You don't even know if that strategy works because you haven't back tested it yourself. You haven't got confidence. And when you back test a strategy, guys, what happens is you understand exactly what kind of signal is an entry, what kind of signal is an exit, where your stops are, where your protections are, where your targets are. You understand everything, guys, and you understand whether you can take something, whether you can't take something, and you interpret it in a different way. And it's hard to understand when I say you interpret it into a different way when I'm just sat there talking now. But when you go and back test, you're going to understand exactly what I mean because chart patterns aren't exactly the same. And you need certain rules and certain conditions to be met before you can take the trade. So that was a long-winded way of saying that, guys. First thing that you should do is have a community. We've got the Crypto Bullseye community here. We've got this Discord group here. This Discord group's free. This is something that I'm building with these guys. But the main thing about having a community, guys, is it's someone to talk to with the same interests, within the same space as you, and you can hold each other accountable. You can chat to each other about certain things, about certain levels, and then you can hold each other accountable, guys. I could put a chart up there and someone can say, what about this? What about that? That'll give me a different thought and a different thesis sometimes. Sometimes it won't. So being a part of a community is a strong thing, guys, and you can be a part of my community for free. You're all welcome here. So it is all about holding each other accountable and having that community. Being a part of a community that's got shared interests and shared goals in exactly the same subject that you're passionate about. So that's the Discord group anyway. Right, okay, let me give you an example of a strategy. Now, a strategy needs to be rule-based. Why does it need to be rule-based? Because it needs if-then syntax built into it. If something happens, then you can go into the next move. If that happens, then you can go into the next move. If that happens, then you can go up to the next move. Let me tell you guys, time and time again, this thing can be annoying. However, it's all about giving yourself the higher probability, letting the risk look after itself, and then trust me, the reward will come later. So you manage the risk, the reward will come later, is what I was trying to say. So basically, what I was getting at is if you've got 5 steps, 6 steps to your strategy, quite often you get to step 5, you get to step 6, and then guess what? Step 7 won't play out, step 6 won't play out. You have to start again, look at a different level, oh, sorry, look at a different chart and wait for it to play out again. So unfortunately, patience is the key, guys. And a lot of new traders, first 90%, that's the one thing that they want to do is earn lots of money and earn it quick. So it's a slow and steady game of trading. Otherwise, you will get yourself wrecked, guys. As far as leverage is concerned, we don't want to be touching leverage on this channel. That's something that, as a UK citizen, I can't even touch leverage anyway. That's why I don't show you buy bit. I wouldn't anyway, guys, because I'm trying to bring tools that are going to benefit the community. I'm trying to bring services that are going to benefit the community, services that are going to help people exit crypto. I'm going to bring things that are actually going to be beneficial to the community rather than just shilling your leverage and getting you wrecked. Because ultimately, I want to give us the highest chance of success. And this is me telling you guys that 90% of traders lose 90% of everything within the first 90 days. That's not me selling trading to you. I'm just trying to give you reality. It's all about risk management on this channel, but let me give you an idea of the bullseye strategy, for example. So the bullseye strategy, step 1, we need to be bullish. So if we're bullish, we're above the 200 daily moving average. If we're bullish, we're putting in higher highs and we're putting in higher lows. What else I'm looking for is a Fibonacci retracement level. So I'm putting my Fibonacci retracement level on there. And the one that I'm looking for is the 61.8% retracement. I'm going to fly through this, guys, because it's just an example of a strategy. I'm not telling you to go and do this strategy. If you want to know more about this strategy, let me know and I will go step by step and the reasons why I do it. So it's not just my only strategy, guys. This is just an example strategy. This is something that I've built in because it's easier for you guys. Simple steps. Right, okay, so 618 is the one that I'm interested in. This is the 61.8% retracement. This represents the 200 daily moving average. Remember, the 200 daily moving average, when you're above it, you're bullish. When you're below it, you're bearish. So we're looking for swings now. And what we're looking for is a pullback. So we're looking for a pullback. We've put in a high, and then you'll see a pullback that looks like this. When you see a pullback that looks like this, we're waiting for one thing. We're waiting for a trend break. So you're looking for trend break, and then you're looking for a breakout. So the steps so far, what we've done, if price is above the 200 moving average, then we're bullish. If we're bullish, we're waiting for price to pull back. So if price pulls back, we're adding in our trend line. Then we're waiting for it to hit the 618. Next thing that we're looking for is an oversold stochastic. This is the stochastic RSI at the bottom. That represents that the market's oversold. Now, what is the significance behind an oversold stochastic here? What you need to do is you need to compare it between the previous low. So you compare it between the previous low, and if you're bullish, you're putting in a higher low. And if you reset on the stochastic and you put in a higher low, that's showing that you're oversold, you're at a key level, i.e. the 61.8% retracement. And then you're waiting for the next thing to happen, waiting for a break of trend. Now, there's conditions that need to be met here for a break of trend. What are the conditions that need to be met? You need a minimum of 2-to-1 risk to reward. We're shooting for the previous high. Why are we shooting for the previous high? Because that high's already been put in. That means that we don't need to continue trends. That means that we don't need to break new highs, which is a difficult thing sometimes. And it gives you a higher probability. The next thing is your risk to reward. So you're adding in your risk to reward tool. You need a minimum of 2-to-1. Where do you put your stop loss? Below the low. How do you know that that is the low? Because you've had the break of trend and you've had the signal that the momentum's changed and the stochastic RSI will start to pull up at this point. So as long as you get a 2-to-1 risk to reward to the high, 2.2 risk to reward, looks good to me, guys. So that is an example of a step-by-step strategy. If price is bullish and you're above the 200 daily moving average, then you're looking for a new high. Once you've got a new high, you're waiting for a pullback. Where are you waiting for a pullback to? The 61.8% retracement. What are you doing next? Adding in a trend line. What are you waiting for? You're waiting for an oversold stochastic and a break of trend. Once you've got the break of trend, that's signaling the bulls have got momentum. Once the bulls have got momentum, that's indicating that that's a low. That's indicating that that's your risk. As long as you've got a 2.1 risk to reward, that's your previous high. That is it, guys. So I know that I went fast on this, but it is just an example of the reasons why you need a community to help yourself accountable, because these moves here, it's all well and good when you draw a diagram, but when you're looking on it on a chart, you can interpret it different. So as a part of a community, you can say, right, okay, X, What do you think about this? Would you interpret it within my rule set? You can say, what about this? Would you interpret it within my rule set? You can talk about the charts. You can talk about things that are concerning you. You can talk about things as far as education's concerned, but community is a big thing, guys. So these are just ways to improve being part of the new cryptocurrency traders, which lose 90% of their capital within the first 90 days of trading. So on that note, guys, let me know if you did find this helpful. Join our Discord group, and I'll see you in the next one.